This morning, I woke up and decided to check my TSLY position. Not exactly the best way to start a Sunday morning. I wasn't thrilled being down 16%, but I didn't spill any of my Cheerios. I sipped my coffee all the same. No huffing and puffing happened around our breakfast table. It didn't bother me that much because I knew this was a high-risk investment going into it, and I'm willing to lose 100% of the position for a chance at a high reward. This is me managing my risk, and this helps me keep a level head and allows me to make better decisions even when I see that Robinhood orange. But this did motivate me to get the work done. In this video, I'm sharing with you my results for several TSLY backtests that address the NAV erosion issue. Remember, I'm not a financial advisor and this isn't financial advice. But the thing is, the stock market isn't like a roulette table in Vegas where if you win big, but if you lose, your cash is gone in an instant. Investments aren't as binary. With stocks and ETFs, especially new ones like TSLY, as more data comes in, we can make better decisions because we know more. Some of us have seen the potential of TSLY despite the chart not looking very appealing. Look, we all know what yield traps look like on charts. They look very similar to this. But if you're watching this video, you're probably like me and are betting that the incredibly high dividend yield can more than cover the loss of principal and still generate returns. But how do we find out if this is happening? How can we, regular investors, figure out if TSLY is just a yield trap or if it's actually making money without waiting for YieldMax to give us a report? The answer is good old-fashioned math. But there's not a lot of calculators on the internet available for our exact backtesting needs. Trust me, I googled it. It would have saved me a good chunk of my Sunday morning. But don't worry, you don't have to take the time to figure it all out. I did the work for you. Yes, I actually looked up the data, created a spreadsheet, formulas and all, made this whole video and posted it on YouTube for you. All I'm asking for in return is a simple tap on the like button. What a great deal. So the first backtest is pretty straightforward, just buying TSLY, holding and taking dividends as a full payout and seeing if there's an overall return. The next backtest is also pretty straightforward, just taking 50% of the money you would have invested and put it into TSLY and put the other 50% into Tesla stock itself. The third backtest is buying Tesla outright. These are going to serve as excellent controls for our next two backtests. The fourth backtest is reinvesting 50% of the dividend because some investors might want to help combat the loss of principal, but still take some dividends and use it as income. This is an income-oriented ETF, and this specific test is what I suspect most people would be interested in. And the fifth backtest is reinvesting 100% of those dividends. This allows us to get more shares without putting any extra money in, and helps generate more income thanks to compound interest as time went on. Now, the thing here is that there is a sixth option, which a lot of you in the comment section have mentioned. Thanks to viewer at HedgeFund1 for your recent comments on that option. Basically, if an investor is willing and able to, you could offset the NAV erosion using your own options contracts on TSLY. I have no way to actually go back and backtest these options positions, but I would assume that for the right individuals, this may be a viable strategy. But your results will vary based on the market and your individual positions. I personally will not be doing this because I'd much rather let YieldMax do the work for me, since options trades do require some level of work, which I simply don't want to do, and knowledge, which I don't want to obtain. I would rather focus on my day job, this YouTube channel, my other investments, my personal life, and long story short, I am not an options trader. And I think most of us got into TSLY because we could be hands-off with this investment. All right, let's get to the setup and results. For these backtests, we're going to start out with $100 in initial principal just to keep things nice and simple. And we'll be starting our investments in January of 2023. This is because in January of 2023, this was when TSLY started distributing a dividend and avoids the first 2 months of NAV erosion. Most people very likely weren't in TSLY for the first 2 months since inception, and during that time period, Tesla had a significant downturn. I don't believe it's accurate or fair to factor in all of that downside with no dividend distribution, which is why this backtest starts 2 months after inception, when the fund started actually paying a dividend. If we bought TSLY in January of 2023, we bought in at a price of $14.02. That gives us 7.13 shares. Today, in January of 2023, at a current price of $10.20, those shares are worth $72.75. Not ideal. The question remains, how much did we make from dividend distributions? Since January of 2023, there have been 13 dividend distributions for a combined payout of $9.67 and change per share. Since we own 7.13 shares, that gives us $69.01 in dividends paid out for a total position worth $141.76. Not a bad start. All right, for our next backtest, we'll take $50, put it into TSLY, and put $50 into TSLA over the same time period. $50 into TSLY at a price of $14.02 would have gotten us 3.56 shares. 3.56 shares at a price of $10.20 is worth $36.31. The dividend paid out since that time would be $9.67 per share for a total payout of $34.46. This gives us a total TSLY position worth $70.77. The $50 in TSLA from January 2023 to today would have been bought at roughly $108, and currently TSLA stock is trading at $218.89. This is up 102%, so our $50 in TSLA would now be worth $101, for a total position worth $171.77. What if we put $100 into TSLA? From our last backtest, we know TSLA is up 102% in our time frame, and that means that our $100 investment is now worth $202. All right, now we get into the good stuff. What if we reinvested 50% of the dividends? So initially, if we bought $100 worth of TSLA in January 2023, we ended up with 7.13 shares. After 1 month of owning it, we would have been paid 0.9986 cents in dividends per share, or a total of $7.12. If we took half of that, that's $3.56, and bought more TSLY on January 12, 2023 at a price of $14.13, we get 0.25 more shares of TSLY for a total of 7.38 shares and $3.56 in dividends paid out as cash. Doing this for all the months, we end up with 9.93 shares of TSLY worth $101.33, and dividends in cash worth $37.29 for a total of $138.62. What if we reinvested 100% of the dividends? So initially, if we bought $100 worth of TSLA in January 2023, we ended up with 7.13 shares. Taking all of the dividend payouts and reinvesting them would have slowly increased our overall shares and gotten us to a value of $139.99. Some key takeaways from these findings for me personally are the fact that from a dollars in, dollars out perspective, investors would have been better off buying TSLA stock outright. But this is an income ETF, and investors aren't necessarily going for max growth. And in our time frame, 100% of our backtests we reviewed did turn a profit. 50% dividend redistribution seemed to be the magic number, since at the end of the test, the shares of TSLA were worth our starting position, and we had the income from dividends left over as profit. And just about all of the backtests that involved TSLY only and some form of dividend reinvestment, whether that was 0%, 50%, or 100%, tended to group around an overall value of $140, roughly speaking. The main difference being how much TSLA stock each position had at the end of it. And anything involving TSLA was worth more at the end overall because TSLA went up during that time period of our backtest. So based on this data, I'm personally keeping my TSLA position despite being down, and will be reinvesting the dividends 100% to allow for the most amount of share accumulation for a higher dividend payout in the future. That is very appealing to me as someone with a long-term time horizon and who doesn't need the income at the moment. But of course, keeping in mind that different market conditions are going to affect TSLY and other covered call positions accordingly. So the risk is still here, but the data so far shows that dividend redistribution of at least 50% might be a good option for individuals concerned about TSLY's NAV erosion, but still looking to generate a yield. And 100% dividend redistribution could turn a small investment into an income machine as time goes on, thanks to compound interest and more share accumulation despite the NAV erosion. Of course, we didn't factor in taxes, black swan events, and generally speaking, a down market, but that's the risk you take in basically any investment. Did this data surprise you? Because it sure surprised me, and it's not what I expected to find, and the data gave me some clarity on how to move forward with my small TSLY position. What are you doing with your TSLY positions? Did this video change your plan? Let me know in the comment section down below. Be sure to like the video if you found value in it, subscribe for more content. Thanks for watching, and of course, good luck in the markets.